The central bank revealed it would increase its asset purchasing fund to 55 trillion yen from 45 trillion yen to counter the strength of the Japanese currency. Today I'm joined on the line by Flemming Nielsen, Senior Analyst at Danske Bank in Copenhagen. First of all, why has the Bank of Japan decided to ease monetary policy?
I think there are three reasons. First, at the moment, Bank of Japan is extremely focused on the strong yen. And for that reason, you can say that the Fed's relatively aggressive easing move last week to some degree have forced Bank of Japan to respond. Because when the U.S. Central Bank increases dollar liquidity, it will tend to depreciate the U.S. dollar against the Japanese yen. And for that reason, Bank of Japan has more or less been forced to follow the Federal Reserve's easing move last week. Secondly, the data we get out of Japan recently have been weak. Growth was revised markedly lower in the second quarter to just 0.7%. And data suggests that growth will slow even further in the third quarter, possibly even be negative. So that's certainly another reason for yesterday's move from Bank of Japan. I also think it is important that board have become more dovish. We have two new appointments recently, and these two new members we know are quite dovish and have been arguing for quite aggressive monetary easing in the Bank of Japan. And that could also have been important for Bank of Japan's decision to expand monetary easing.
And how are the markets responding to these recent announcements?
I think that it did surprise the market a little bit. I think that the consensus view that eventually Bank of Japan would increase the target for its asset purchases. But the view was that it would probably not happen until late October. And I also think that the size was a bit more aggressive than the market expected. Importantly, because now they're going to purchase more government bonds, but importantly, they also abolished the minimum requirement for yields on the government bonds that they purchases. So, for that reason, there will also we will probably see that Bank of Japan will be able to push government bond yields closer towards 0%. And it hopes that it could have some impact on the Japanese yen, weakening the Japanese yen against the US dollar. Where there might be some skepticism, in particular in the short run, is will it have an impact on the real economy? That's still to be seen. And we must say that if we look at Japan, we are probably not going to see a significant impact. You could argue that to some degree this was a quite defensive move. I think the biggest impact in Japan will be through the exchange rate. And it was basically Bank of Japan wants to avoid an appreciation in the Japanese yen. So I think that's where there will be the biggest impact on the biggest impact on the real economy in Japan will be through the impact it has on the Japanese yen exports and investment demand in Japan.
And finally, what are your views in regards to growth for Japan's economy?
I think this is a relatively defensive move from Bank of Japan, and to be honest, I don't think that the monetary easing that the Bank of Japan is doing at the moment will be able to save the Japanese economy. I think that the third quarter will be quite slow, and a recovery in Japan will eventually depend on a recovery outside Japan and an improvement in Japan's export. And not least a recovery in China. China is now by far the most important trading partner for Japan. More than 20% of Japan's export goes to China. So at least concerning Japan, the message continues to be after that the reconstruction after the earthquake was a boost to growth. in Japan until the first quarter. Looking ahead, a recovery in Japan will be dependent on a recovery in the global economy.
Thank you, Flemming, for sharing your views on Japan. Stay tuned to Dukascopy TV to keep up with the latest forex and economic news. Goodbye.